Are you new to real estate, struggling in real estate, wholesaler, cash buyer, or really just trying to figure out better ways to close more deals, or even your first deal? You're in the right place. Each week, I pick a random house off the internet, I analyze it for a cash deal and a creative deal. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all using low to no cost tools to analyze property and craft strong offer. Welcome to the weekly deal analysis. Let's get into the show. Hey, real quick, before we get into this week's show, if you haven't done so already, hit that like button for me. And if you think somebody else might find some value in this, share it with them. Let's jump in. This week, we are jumping to Jackson, Mississippi, 4832 Woodmont Drive. It's a three-bedroom, two-bath, 1,445 square feet. They're asking $139,000, and they have been on the market for 310 days. It looks pretty from the outside, but let's take a look through the pictures and see what might be wrong with this thing. I don't know. Looks really pretty. We got new LVP flooring, freshly painted walls, probably a gas fireplace, good lighting. Kitchen looks pretty. A big kitchen, dining space. I bet that's a pantry. A space for the fridge, stainless appliances. Oh, are those tile countertops? Oh, no. Please tell me they're not tile countertops. I don't think there's more pictures, but I think these are tiled countertops. So this isn't new. If it is, it ain't in great shape. New carpeting or just really clean. Bathroom. Those are tiled countertops. Those would all have to go. What else do we have? Another bedroom, bathroom, again with the tiled countertops. All right, overall, looks pretty good. I would definitely get rid of the tiled countertops because the grout lines just soak up nothing but bacteria and germs and all the nasty stuff. And this agent's not telling us much. New roof, so that's a good thing. Large back porch, which I don't think they really even showed a picture of. All right, let's keep going. Property taxes under 2,000, pretty reasonable. Another non-disclosure state, not a matter of public record. Maybe the investment will tell us some more later, but so they've been trying to sell this thing for quite a while, as you can see. What else can we find here? Maybe help with some value. I mean, outside of the tiled countertops, so that's maybe $5,000 to just throw some stone in there. We'll plan on that for our repair budget. So let's see what else we got going here. Anybody selling anything around here? It's not showing me anything sold or under contract at least. What about here? And nothing. All right, let's go dig and try to find um, let's try to find some comparable sales. I'm not sure what I did here. I'm just going to cancel out of that. Let's go back and just look around, see if there's anything under contract nearby. This is pending at 300. Not the right area. Pending at 35. Oh, yeah, well, that explains a lot. Here's a 285. 134, 12, 13. That needs a new kitchen. 89. Let's see what this one is. Do you have any? I'd say this is fairly comparable. I think the one we're looking at is nicer overall. All right, so we're going to use this as our base case, but I think that helps kind of narrow down what we're looking for here. So this is at 113, a little bit bigger and still on the market. This is under contract at 90 or 89 rather, sorry. So I think our subject property, if I can find it again. There we go. I think probably in the neighborhood of 110. We're going to use 110 as our ARV. I like that. So 110 ARV. And if you're not sure what ARV means, it is after repair value. That means what something is worth essentially on an appraisal to show what the value is after repairs. So remember, keep that number in mind. When we break down the cash deal, that's going to come into play. And rental wise, let's see if they're telling us anything here. Apartment, single family for rent. 2-1 for 950. 1275, 13, 13, 1250, 14, 1450. Looks like the 3 bedrooms are around that 12 to 1300 mark. For right now, which we're going to go check, but for right now, I think we're going to say our rents top end would be 1300. All right, I think we've pulled up everything we can here. Now we're going to jump over to the Invest Nest and break down the cash deal. I've got it pulled up here on the Invest Nest. I love this site. If you want to try it out, there will be a link down in the description below. That will get you 1 week for free and 50% off your first month. Try it out. I think overall it's like 40 bucks a month. And one of the coolest things that they do, they roll in skip tracing right into it. It's not an extra charge, but you can only pull one at a time. If you're looking to pull big lists all at once, then PropStream and Privy are going to be the right ones for you. If you have no idea what I'm talking about, drop a comment below and I'm happy to explain what I just said. Overview. Definitely an investor owned. Finance details. I think they paid cash for it. Probably a flip. Oh, this is telling us a whole bunch of stuff that Realtor was not. So same list date. Went under contract. That contract looked like it fell through. Then they took it off the market. Then they put it back on the market within a couple of weeks. I bet that would be with a different agent. Then they went under contract, and a couple months after that, that contract fell through, back to active, back under contract. So they've had offers on this thing. They just keep falling apart. Location, Hinds County, that's going to come into play for our rents, which we'll show you that in a minute. All right, so they're still saying they think, oh, and their rental estimate is 1463, and we were guessing 13. We'll write that down also. So 1460. And all right, let's break down a cash deal. We're just going to label this the property address. And for our purchase price, remember what we said our ARV or what we think it was 110,000. For our offer price, we're going to offer 70% of that minus repairs. Get my calculator here. So 110 times 70%. And we were guesstimating about $5,000 for those repairs. Minus 5,000. That gives us an offer price of $72,000. And closing costs, we are going to be paying 4% because we're going to offer to pay both sides, and that's about 4%. The lender is going to charge you 2 points. That's how they get paid. And a point on a mortgage is really just a percentage. So that is what their percentage is. Cost of the improvements we said are 5,000, and we want to roll those into the loan. Down payment, we're going to be putting down 25%. Interest rates, they're about 7. They kicked up for our investors, and I want a 30-year term. So to double check our rents, we were picking up around 13 from Realtor. InvestNest is saying 1463. Let's check HUD. So this is the HUD or Section 8 website. Again, link will be in the description below. And so for an efficiency, 1 bedroom, 2 bedroom, 3 bedroom, they're saying they will pay up to 1530. 1530. And then this would be for a 4 bedroom. And one more site that I really like to use as a reference point is Rentometer or Rentometer. Again, link will be below. Phenomenal site. I highly recommend if you're going to be doing a lot of analysis, just pay for the site. If you're doing 1, maybe 2 a day, then you can get away just doing what I do and using the brief side. So an average 13, almost 14, high end 1560, median is 1375. So I think we're going to stick to this 1375 as the median and as our rent for this analysis. Might be able to get more, you might not be able to, but for this purpose, we're just going to use this median number. And again, always check with a local. They're going to know a whole lot better than some random guy on the internet doing a podcast. So 1375 is what we're calling. Taxes, those look right. Insurance, I like to factor in $125 a month or $1,500 a year. Property manager is going to be 10%. Our tenant is going to be handling all of these utilities, so we're not going to factor that stuff in. And our reserve fund, I call it my war chest. That is 5% for repairs and maintenance, 5% for vacancy, and 5% for capital expenditures or CapEx. All that means is we're putting 15% of each month's profit away for a rainy day. Because in real estate, it is never a matter of if something is going to go wrong, it is when something is going to go wrong. So we don't want to have to dig into our pocket to get this. So we create a separate fund for that and we factor these numbers in. Appreciation, which just means the house value is going to go up. We're going to focus on a 2%. And rent increases, I want to focus on a 2.5%. And we are real estate investors. We do not pay full commissions. So let's see what these numbers look like. You were waiting to see if it cash flowed. I know, but I have to ask one more time. If you haven't done so already, please hit that like button and share it with somebody who else might find this interesting. Now, let's see if this thing cash flowed for a cash deal. Boom. This is awesome. $361.36 each month profit. That's net after all expenses. Let's break this thing down. For just over $23,000, you can bring home $361 a month. Even at a 7% rate, your overall mortgage payment is $485. So cap rate, if that's more of a multifamily thing, that just stands for capitalization rate. If you have questions on that, drop them below. Happy to answer. DSCR or debt service coverage ratio. This is an investor loan, and this thing is on fire. They like to see a minimum of about a 1.2, 1.25. This being a 194, you're awesome. Cash on cash return, 18.5. ROI, 27. Wow, that is a great return. 1% rule, if you do follow that, this more than works. And here's another thing I love about the InvestNest is it shows me where each and every dollar is going. So 206.25 goes to the war chest every month. All my fees and all my stuff here. And then they can even come down. So if we end up holding this thing for 10 years, that's a 30% cash on cash return. I like it a lot. And even further, so we're to get back all of our original capital, we're about 5 to 6 years. A little longer than I like. I like 3 to 4 years, but for this, I would probably still pull the trigger on it because it is such a low dollar amount, at least for the purchase price. So 6 years, you got all your money back, and now it's an infinite return. Now we're going to jump over and do my favorite part, analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. There's a ton of free, useful information on there. Check it out. It's just a quick click and download, and you'll be off to the races. If you're looking at potentially a subject to deal, I've got a free sheet on there that you can analyze a subject to deal as well. All right, ARV we think is 110,000 on a creative deal because we're asking the seller to be our bank. So we have to entice them enough, but we're going to use that really low cash offer and then hit them with a nice creative deal. So at that, I think we'll say, hey, we'll give you what we think it's worth at 110, and we will pay you a 4% interest. Now we need to figure out what our PITI is, or principal, interest, taxes, and insurance, which is just our mortgage payment. So for that, we're going to jump over to Bankrate. I've got it pulled up here on Bankrate. Very simple, bankrate.com. Again, will be down in the show notes. So 110, and I only want to put down 5% on a 30-year term at 4%. Zip code 39206, 39206. Now I want to factor some of this stuff in. Homeowners insurance, we said, was 125. Property tax is 160. All right, 784. So our mortgage payment, or principal, interest, taxes, and insurance, equal $784 a month. 784. And we said our potential rents are 1375. Heck yeah. So that's 591 total gross cash flow. Then we put 206.25 into the war chest, 137.50 to the manager, and that is a net cash flow of 247.25 every single month. I like it a lot. So right now, that is an ROI of only 2.5 years. Now we got to add some other fees in. So we said we were going to put 5% down, which is 5,500. This agent hasn't really done anything. Let's see if we can throw $500 at him to go away. We're not working with a wholesaler, so we don't have any assignment fees to pay. Closing cost is going to be that same 4% that we used on the cash deal because we're paying both sides. Cost of renovations, we said are 5,000. And 2 months of holding is just 2 months of this PITI, or the mortgage payment. And the reason we factor this in is 1 month vacancy and 1 month to pay the agent to find and place the tenant for us. No arrears, and a good TC or transaction coordinator will cost you about $1,500. So all in, you are $18,500 out of pocket with still a 6-year return to get all of your original capital back. So we're looking at 18.5 on the creative side out of pocket and 23 on the cash deal. So I don't know about you, but I'm taking the creative deal. What are your thoughts on Woodmont Drive in Jackson, Mississippi? Cash deal or creative deal? They both have the same ROI, or put your cash back in your pocket. One just takes a little bit less, one takes a little bit more out of pocket. I think they're both great deals, but I would love to hear your thoughts down in the comments. That's going to do it here for us on this episode of the weekly deal analysis in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. We will see you next week.